Just in a second. Good morning. Good morning. Happy Monday. It is January the 8th, 2024. If I could get a mic check in the options room as well, to know that we are good to go, I'd appreciate it. So, again, all right, cool. Thank you, Omer. Appreciate it. Good morning, everybody. And Trinity Trading Room is good to go. And we are live on YouTube in about 1 minute. So I have a couple things for you guys this morning. We'll be going over the ES futures, looking at the NASDAQ futures. And again, if you didn't get to watch my broad market analysis last night, please do so. It's full of information. We already have traders coming in this morning who've made money on the Nasdaq, on the entry long, and so forth. Those are actionable trading charts. So again, good levels on there. Hopefully, you guys are able to use them at least to some sort of your advantage. Whether it's you want to look to get short this morning or you want to get long. We'll be going over that here in a second. And then I have a few watches for you. We'll go over those as well and just kind of talk about my trading style and so forth as always. And then we'll have Melissa come on. The only thing as a disclaimer, I will tell you when Melissa comes on, because we're also streaming to YouTube, if anybody is on just YouTube, you won't be able to hear Melissa that I'm aware of. So she's going to talk for about probably about 10 minutes about her um, charts that she'll be looking at. She'll be talking about her entries, also her stops and her targets and all that good stuff. All right. So let's go ahead and get started here. So, again, good morning, everybody. It is Monday. And guess what? The ES Futures Green Box is working. I sent this out not only here on Twitter, but also for the masses to see. And you guys get to wake up and see the proof of concept. That's what it's all about. Now, these zones, I'm going to open up the chart just a little bit here for you so you can see that. These charts are primarily made based off a 2 hour, then I go to like a 90 minute, a 1 hour, and then I just keep breaking it down until I come up with the best zones. So those zones, they are identified as demand and or supply. Some people just simply call them a buy and a sell zone. The green is pretty straightforward. This is where we're looking at accumulating and going long. And the red is not necessarily where you go short. All right. So this gets a little confusing for some traders. And the reason why I say like you don't necessarily go short is because it's been a really strong market. And when it's a really strong market, you got to be careful. So I'm going to show you just really fast how I approach a supply zone. It may be different than what you've learned. So let's just assume here that price has moved up towards the supply zone. Once we get here, what I like to say is if we basically breach this 47.53, I want you to bring those stops up. We're going to anchor our Fibonacci's from the pivot low of the rally. So we'd be looking at here and say right up here. We will identify 23.6 and 38.2% of this rally that we're measuring. And as long as prices are staying within that zone, I consider that a bullish run up. Now, you don't have to put your stops under the 23 and 38. That's totally up to you, but that is how we teach. The biggest thing is for you to understand that 23 and 38% is bullish of the actual trend. So again, today these are our levels that we're looking at. And so far overnight, if we take a look in here and we come into a 5 minute, you're going to see that it's worked out very well. Now, there's a couple things that we look for when we enter, and you can use this in your own trading strategy, whether it's supply and demand, whether you're just trading off of EMAs, really, it doesn't matter. We call like an aggressive and then a conservative approach. Okay. So aggressive versus conservative. What I'm looking for is aggressive. We see the green box. We understand the levels and we can accumulate in this area. When I say accumulation, you can use ES Futures Blueprint for SPY, SPX. You can also use this on micros or minis. Now, this is the minis chart. And what I mean is this entire level, 25 all the way into 94, and I understand it's really wide. So it may not be and may not fit into your risk tolerance. But when it comes to options, it's a little bit more flexible. When it comes to equity, it's a lot more flexible. And when it comes to micros, it's a lot more flexible. So again, depending on how wide this is, obviously means whether or not I'm getting aggressive. Just go ahead and accumulate in the green box or conservative. If it's too wide for you and you want to be conservative today, then I look for what's called the trendy turn signals. And the way that we teach these is we look for the level within the zone or at the zone, and we wait for one of our trendy turns to pop up. Then we go ahead and take the entry, our stops go in, and then you ride this bad boy. Now, I did send out a video last week and on Twitter on how to trade an uptrend, and it involves the cloud and so forth. We won't go over all of that this morning, but if you have a few minutes, go out there and watch that video when you have some free time. So, overall, my sentiment this morning is not going to change from my broad market analysis that I did yesterday. It's basically like we can continue to push up, but this push up really is just a relief rally until proven otherwise. Matter of fact, ES Futures has to show us that it can at least get over 47.50 before I even take this bounce seriously. Now, when I say take the bounce seriously, it doesn't mean that we can't already be long and making points from the green box. It just means the trend from last week is still intact. Okay. So, again, major levels, I gave those out on the broad market analysis yesterday. Very important that you understand those as we come into today's trading session. Okay. All right, so we'll go over those notes just really quick because I do think that it's really important that we touch on these. So give me 1 second as I come over here. And again, if I'm talking ES futures, you can also apply this to SPY, all right, and or SPX. Just for quick number sake, when we're talking about ES futures, every 10 points equals $1 in the SPY. So if I say, hey, we need 47.50 and we're sitting at 47.30, that's 20 points and that's $2 to the upside that we need in the SPY for us to reach those levels, okay? And again, if you guys have any questions, you can ask a little bit later. So our major levels going into this week today is 47.50. We need to see price at least get there. And if we break that, then that's great. The trend is not broken from last week unless we see buyers come in over 47.80. If we take out last week's lows and we start to go below that, then guess what? There's more room to the downside. Going into the NASDAQ, we had the same type of look. If we come over to the NASDAQ, give me 1 second as we put this in here. It's going to look the same way. We came into our demand zone last night. We pushed to the upside. It's been a great trade if you took advantage of that. And as we wake up here, we come really close to the liquidity chop and we pull back. That's exactly what's supposed to happen. Okay. So again, green zone, looking to accumulate, or you can wait for a trendy turn and then take the trade to the upside. All right. But we have major levels. This is just a relief bounce until proven otherwise. Okay. So let's talk about those levels really quick. We are going to come over here and I'm trying to read this for you guys really quick. You're looking at 16,610. Okay. I know it's far away. So it's a relief bounce until we can at least get there. And guess what? We don't break the trend unless we get over 16,771. So we're quite a distance away. It's a new week. We're headed into bank earnings. So if you guys are looking for a quick play, we can look at that a little bit later. We can look at like BAC, JPM, Goldman Sachs. All of those could be on watch today using your trendy methodology. Just looking to go long at the edges and or short at the edges. And again, we'll cover that a little bit later. So besides the NASDAQ and the ES futures, all right, before I move on, it's important that you understand the system of the PMZ. The pre-market zone is one of our most popular strategies, especially for our intraday traders. And Melissa will be talking about this a little bit later. But the way that we use them, and we'll just give you an example here on the NASDAQ. Right now, you have basically your trigger long is 16,488.65. All right. PMZ low, 16,479 and a half. The distance between those two is your risk, which is coming in at or around, and we'll round up to 10 points. If you're okay with the risk, it's a very mechanical, methodical, sequential approach to trading. We don't think too much. We just look at the risk. That is the most important part about the execution of the strategy. If you're okay with the risk, you take the trade. And it's not something that we marry. Okay. So one thing that I'll tell you for pre-market zone, I was joking around last year, but it really stuck with me. I like to call it the premarital zone. Like just take it for dates, have a good time with it, make some money to the upside, to the downside. no reason for you to marry the idea. If it turns into a very long-term trade, awesome. I think that's great. All right. But for right now, your risk today on the NASDAQ futures is going to be 10 points. And over here on the ES futures, as of right now, your risk for today's trades, and it's going to pop up here. Give it 1 second, is going to be, let's go ahead and round this up to 2.5 points on your ES futures. That means any trade that's taken today, the stop is 2.5. Okay. So out of the PMZ, 2.5. If I take a trade down here at the trendy edge like this morning, my stop is going to be 2.5 underneath there. So I personally like to use the risk that's up here to any trade, whether it's outside of the PMZ or not. Okay. Far as watches are concerned, let's go ahead and pull this up really quick. All right, so this little guy right here talks about my trading style and the different things that I use. So basically, supply and demand, my indicators that I use, how I prep in the morning. But most importantly, for this week, these are going to be some of the watches that I have, and I've updated the notes already, and you guys can see some of the in there, the ones that I at least like. So CrowdStrike is one. It also is an AC/DC setup. Coin, Mara, again, Bitcoin, definitely on watch. I love it. I sent you guys out the 2024 projections, so be looking at stocks that have something to do with Bitcoin. Um, NVIDIA, AMD, SMCI. I put all these charts in there for you guys. They have entries, they have support, they have targets. So if you have any questions, please let me know. All right. So that's all I have for this morning. It's a quick review because most of my work is done on Sundays. All right. And again, that's where you're going to find the bulk of the information. And then when we wake up this morning, we just sit down, we wait for those levels, prices come into those levels, and then we execute. The 4700s on the put and the call side is what I loaded for SPX. For everybody that's following our strategy, when it comes to SPX, we've loaded the 4700 zero DTEs, and it's pretty cool. Today, the risk is only about $100 on both sides of those options. We'll show you more of this once we get started. Again, loaded the 4700 call and put, and then let's see, make sure I'm not missing anything. If we come over here to the neutral strategy, which I know many of you trade, this is what it looks like this morning. So far, price is just pushing off of the trendy edges. We're getting a little move, but your resistance, again, we're inside this cloud. We talked about it yesterday. It's going to be a little bit choppy, a little bit of volatility. And I don't really think we get the bigger move until maybe Wednesday, Tuesday, Wednesday, as we approach it into earnings. Okay. That's all I got for you guys. If you have any questions outside of that, please wait until Melissa's finished. So she's going to be talking for a little bit. For those that are on YouTube, just kind of hang out. And again, we'll start live trading here on the open. You guys have a wonderful day. All right, awesome. Thank you, Melissa. Appreciate it. Let's go ahead and let's see. We have still 10 more minutes left. So let's talk about a couple things. If you didn't have a chance to watch yesterday's video on how to stay in a trend, we can definitely go over that. The timing of the video seemed appropriate because of the fact that we were expecting a little bounce here out of demand. And so we'll go over that really quick, whether you watch it or not. And if you guys have questions, a great time to ask. But basically, just using a pretty straightforward indicator. I mean, you really could at the end of the day just use this cloud, the EMA cloud, and say to yourself, "Hey, as long as price can close above this cloud, I want to stay in." You could alter that plan, and you could say something like, "If the candles close inside the cloud, I'm going to go ahead and jump off as well." All right, out of the trade. So a lot of people are different. Melissa and I, especially when we're trading options or equity, our whole thing is I'm going to take you to a whiteboard, and this really can separate you from the masses. A lot of traders, they have really good levels. So let's just do a red line and let's call this a stop. All right, and right here we're just going to type in stop. A lot of traders, we really do have a good level, if you will. All right. The problem is that most traders all think the same. They're like, well, if it hits my stop, I'm out of the trade. Also, a lot of traders, they judge themselves on the percentage of their options trade or even their equity trade. They're looking at the monitor section. And let's just say this is Apple. They look at their Apple position and let's say that, things were going really good for them. Things are going up this way. They start to turn on them and they're like, man, that 30% is now 10%. Oh, now it's negative. Now it's down 30% and it's hitting my stop. Oh my gosh, it's down 50%. I'm out. And what will happen in many, many instances is that your stops, whether you understand supply or demand or not, a lot of times your stops are placed right by a demand zone or in a demand zone. And what will happen is that the market itself will pull liquidity, right? Liquidity grabs and they'll spike down into these levels, and you'll be like, "Man, I'm so glad that I got out of that position." And then it comes right back up, and then all of a sudden you get what's called a hammer, right? It looks something like this, and lo and behold, this starts happening. I would imagine that many of you have experienced this, and it doesn't mean that every time you place a stop, you're in demand. At least here in the Trinity room, we are doing that, and we understand what's going to happen there. So it's important that Mel and I, when we talk about our stops, what we're doing is, let's say that this is a 30-minute chart. We are giving the chart itself time to do what it's supposed to do. So if this is our stop, and let's say this is a 30-minute chart that we presented to you, we will allow the candles to prove themselves within that 30 minutes. Now, this is not for everybody, and we understand that. And the reason why it's not for everybody is if everybody was doing it, I really do feel people would be doing a lot better in their trading. It's kind of hard to argue with somebody like Mel, who, what, last week had a 90% win rate. And really, it was 100%, unless you're talking CVX, which came from last week. And myself, I was at about 72%. So we have really high win rates. And so what we're doing here and what we're teaching you, it works. But the problem is that many traders will look at their positions and at this point say, man, I'm down 50%. That's not cool. And then I would rather go through the time frame and obey my stop loss and know that when I put the money into the to this specific trade, I understood what my risk was. That's what will separate you. Trade with what you're willing to lose on an intraday perspective and trade what you're willing to lose from a swing perspective. So even when my position may be down 50%, this can happen to me. And then guess what? Then I get to trim, I get to get out of my position. It makes a lot of sense that a lot of traders put their stops at the same spot. Now, on these ES and NASDAQ future charts that you'll see, I use what's called liquidity chop. And the idea is that exactly what it's showing is that prices come up and they come around the liquidity chop and they stop traders out. Like in this position here, traders would place their stops here. Okay. Market comes down, it takes their stops, builds liquidity, and then presents its way right back up towards the upper liquidity chop. Now, if ES futures pushes up towards this area of 47.41, I'd expect price to kind of come up here, grab those stops, and come right back down a little bit. So it's very, very important that you're aware where you should be placing your stops. But two, if you can get on board with this, I would respect the time frame that you're using your stops on. So what I'm saying is you wait for that time frame. So if I'm on a 30 minute, you wait 30 minutes. Okay? If I'm on a swing trade and I'm using a weekly chart, I got to wait the entire week. Like I don't care if Tuesday it comes down and hits my stop. I want to know by Friday if we actually close or we're above that stop. And again, it's not for everybody, but I think that our win percent really speaks for itself. Let's go ahead and move on into a couple setups just really quick before we get started. The PMZ, as I was talking, is now on your charts right here, the pre-market zone. If you don't have it, that's okay. Let's go ahead and mark the levels, if you will. If you come up here, we're going to PMZ high 47.37 and a half. We know that there's no such thing as a 0.45. And then on the low side is going to be 47.35 and a quarter. So we're going to bring that down. And again, let's go ahead and use 2.5. You could use 2.25, but I like to just kind of round it up. And again, the idea here is this zone is going to act as that springboard, if you will, for a move to the upside and or to the downside. Now, one thing that you can use also at home, whether you have a PMZ or not, is how can I approach a trade from the perspective of risk to reward? What I love about the PMZ, it tells you what the risk is. Okay. We know today our risk is 2.5 and we know where our targets are. And when we know where our targets are, we're able to put together what everybody is looking for. So if I were to go long right here, on a break above once we 47.37 and a half, and I'm looking for a target at 47.41. You could do the math. All right, 38, 39, 40, 41. That's about 4.5 points or so. All right, but your risk is 2.5. So you ask yourself, is it worth the trade for you? 2.5 points of risk for 4.5 points to the upside. And then also you can look at it from this perspective. This is your next target at 46 and then up here at 53. Now, another thing that you can use is the quant pivots here at Simpler, which I absolutely love. And if I come over here and I open this up, I can go ahead and add in the quant pivots. And these are going to give me, and I use them for targets, which is really cool. So I'm going to add these over here just like this. I'm going to open this up and I like to put these on a 2 hour. Okay, so we're going to come down here, 2 hours right here. And then I am going to show next. No, I don't want to see statistics. I really want my charts to try to remain as clean as they can. Okay, and I'm going to hit OK and let's apply. And let's give it a second here to pop up. And there we go. Now, what you'll notice on your screen is we have quant pivots, and these are awesome for targets. So this is what we call L1, L2, H1, H2, and basically it's pretty awesome. My liquidity chop just happens to be right here at the H1 level. So again, this would be resistance until proven otherwise, and then we have a target up here as well. If for some reason we break down below the PMZ and you decide to go short, same thing, guys. Your target down here is around 47.31. I believe this morning you may get a little bit of choppiness off of the go, but they're looking like the same risk to reward on the open. Basically, you're doing about a 2 to 4, right? 2 risk, 4 return. Okay. All right, so I want to make sure also here in the options room, you guys understand you have 3 different charts to choose from. You could just stare at my trendy futures charts that we're watching. You can look at the main screen here is where I teach from and I talk through all those good things, okay? And in the trendy trading room, I would love to know if any of you guys are taking the trades on the future side using your trendy methodology and how well you're doing. I know some of you guys have already started your longs, but here's a great example of the NASDAQ this morning. And again, coming from the green zone, we're pretty close to the red zone. And your risk over here has went up just a tad at 12 and a half. We're pretty close to the red. If you recall, we don't necessarily go short here, but I would look for resistance as we approach in here. All right, so there's the bell. Let's go ahead and watch this as it unloads very close to our red box, long above the PMZ. Very nice. All right, and there's that little bit of rejection. Again, I love to quote John Carter here and say, don't be a D for a T. So if you're looking at my charts and we're coming close into targets, you don't have to place your target right on the line. You want to actually try to basically get out before or trim before price gets there. Now, when we do start to see some kind of rejection and a pullback, conservative will be looking for one of these blue arrows right here. Okay. One of those blue arrows. That would be the conservative approach. Aggressive, we basically just get in this red zone and you start to go short. But for me, I would prefer to look at it more from a conservative standpoint. Okay. And our snow is still up this morning as well. Microsoft trying to find some bids as well. Both of those options I have 39 days left on. They both look good. And then our equity that we've started this year is still looking good. Awesome job, guys, here. Who's right in that move out of the PMZ as we see it right here? If you are, let's hear it here in the Trinity room. I love it. You hit it, you smashed it. Awesome. Love to see it. All right, guys, we're up here at the H2. So the H2 is the quant pivot. I know you guys can't see that. If I take that off, you're going to see it. Awesome target by the quant pivots there. So again, we're coming into there, and this is why we do not short the red zone. I'm going to show you a trick really quick to help you out. So as price is pushing up, this is what we're going to do. We are going to use our Fibonacci's, and many of you got the free indicator that I pushed out to you over the weekend, and that is your auto fibs that we use. This is the easier way to do is the auto fibs. But what I want to do, I'm going to take this rally right here that started at 8:05, and I'm going to place my Fibonacci's from that pivot low into the pivot high right there. All right. And basically, I'm going to use good old Fibonacci. And it's crazy, right? You don't even have to buy an indicator for this. So right here, price pushes up. And once it starts to back off, what we want to do is we want to identify the 23 and the 38.2%. Yeah. Yeah, Amazon, if you guys want to go ahead and trim as well, we are up on that position as well. Oops, sorry. I forgot that I have all this stuff linked. Let's go over here to NASDAQ. Damn it. I'm just going to hold on to my Amazon. All right. And I want to show you guys, I love using this Fibonacci tool because I feel like it's something that I started studying and understanding that it's very fractal, meaning you can use it on any time frame. And I promise you, if you guys just use this strategy alone on your swing trades, whether you're using a weekly, a quarterly, a monthly, like this is going to up your game. I'm not telling you, listen to me. I'm going to tell you guys this over and over and over. I don't care what I teach you, there's no guarantee you're going to be profitable. But what I am going to teach you is how to be a consistent trader and have a process that's going to allow you to trade at a Zen state. So, again, allocation and understanding how this stuff works is really going to help you out here. So, again, 23 and 38 on my main screen. We'll continue to watch this. By the way, guys, on the ES futures, you already hit your target there and possibly coming into 47, 47, 46 and a half. I would go ahead, if you have more than one, go ahead and trim here um, because we're so damn close to that target, okay? Angie, we put out the message on Friday. All right. So if you didn't see the message, you guys could talk about it in off topic if you want. Kind of help her out. or we'll get back to you here after the trading kind of dies down. See that? So basically what I'm doing, guys, is that as long as price is not closing underneath the 23.6, you're not getting short. Conservative approach, we are going to wait for blue arrows to pop up. Okay, that's conservative. Everybody understand. We are not going short yet. And we don't even have to go short. All right. So that's another thing. You don't need to go short. And and I apologize guys. My screens, because I'm running on YouTube and two different rooms, kind of slow here. Not ideal. All right. All right, at 66%, guys, and I'm going to copy this over into the options room. I apologize, guys. We don't have our API going to the options room because we do that here in the trendy room. So I'm gonna go ahead and paste here. We're just trimming. Okay. All right. So again, 66% there on snow. Congratulations. Nice move for us. So again, snow was a big, huge part of what I teach. I don't look at the percentage. I don't care that it was down. All I do is look at my chart. And if you guys can learn to do that, I is that if you look at it, I hate to say this, if you look at like a conspiracy theory that if I were in charge of the market and I created a system and we had a percentage tied to it, and I know that 90+% of people are not successful in their trading, well, that percentage is really going to rock you mentally. But here's the thing, if you are truly a technical trader, all right, my question to you, the technicals, are they working on your chart? If everything's holding like it's supposed to, okay, and you get a dip, sure, your position's going to be down, right? But the question is, this was a swing trade that had 50 or 60 days when we started, and it was still playing out within my chart. Does that make sense? So if it's playing out, I'm not looking at percentage. I'm focused on the trade itself. Okay. Anybody resonate with that? Anybody like understand what I'm saying? Yeah. So again, if your technicals work more than you, meaning your mental side of trading, focus on what I just said. Focus on the chart, and I promise you, if you're always getting out because of percentage, it means you're over trading your allocation. You might sit here and say, John, well, I'm okay with losing $1,000. But the truth of the matter is, people are not used to it. I've coached and traded with millionaires who like literally they have a hard time putting $1,000 on a trade because they've lost so much money in the past. It doesn't matter how much money you have in your account, guys. People don't like losing money. We're all here for the same reason. We're here to make money. But if you could just tell yourself you will lose money, things start to change. You're like, well, that's true. I did sign up for this, right? You see what I'm saying? And you need to be reminded, and I promise you, I am going to remind you that you will lose in trading because not only will I have some losing trades, but you will lose. And when you do, the question is, do you have perseverance? Do you keep your chin up? Do you rely on the process? And the process, when we say the process, right? We're talking about following your rules, man. Trendy methodology. We're in a red box. We just continue to freaking drive to the upside here. We're staying above the 23, the 38. We're keeping our positions. We're not getting FOMO'd or we're not getting fearful. We're just trading. All right. PayPal's trying to make a little comeback as well, which is nice. Not bad. Now, our cost basis now on snow is $1.32, and we're trading at 241. So, we're up nicely here on the position itself. And by the way, guys, if you're in snow with me, this is a AC/DC, and I understand that the options room might not know what that is, but AC/DC equals ME. So our high probability trade now is a move into 200 and a half, potentially this week. Far as support is concerned, now we're looking at 192. 192. Okay. Far as this trade setup goes, I do not want price to close under 190 this week, under 190 this week. Okay. That's right, Otis. Exactly. All right. So arrows at a level. Yep. I heard somebody say that here in the options room. So very, very good. And Mel, did you get into Amazon this morning or was your Amazon position from last week? Sorry, I was trying to look there. Got so many things I'm trying to last week. Okay, got it. Nice trade there on Amazon, guys. Looks like you trimmed at 38%. I think those were add-ins as well. Remember, Chris, like I'm gonna pick on your comment there. IWM filled the daily gap at 193.33 and is now 192.70. Not good for longs. Chris, in that statement that you made, how does that relate to demand? Right. So that's the thing about demand and supply. And for me, how many indicators are telling you to go long when price goes down? Zero. Zero. Just like the movie The Big Short. How many indicators are telling you to go long when the market's going down? Zero. Demand tells you to go long when the market's going down. Execute at demand level. So the question is IWM at a demand zone? If it's not at a demand zone, then it can continue to push down. So the big thing would be like, hey, IWM is still dropping below this level and demand is still $4 away. We could see a push to the downside. That's how I would approach those comments. Looking at BA, especially when we're talking trending methodology, and then when we're looking at BA, when I looked at it this morning, Mel, I'm not sure, but I have a green zone, if you will, a demand zone, and I'm waiting for that before I get long. Now, we do have a pivot low. I have a trendy yearly mid edge that is down here at 222. This is what I personally would like to see, just because there's an edge there. But from a PMZ perspective, it could end up being a nice little intraday trade, right? So, but I like the long approach, possibly at 221, or we have this imbalance right here at 210. So I'm going to give it a day or so. All right, awesome. Yeah, let's see. Let's see. Well, let's see, Chris. Right? I'm very curious, man, because you know that we called that IWM last year and we hit our first target at 200 and something. And guys, by the way, over here on the Nasdaq, if you watch my futures chart, we are not closing down below the 23.6. The ES futures pulled back. Let's go ahead and look at our ranges for the ES futures. All right, so I'm going to use this pivot low here. come up to the pivot high. And if you guys could just take one moment to look at my futures chart and you'll see how they flush the 38.2. They take stops and then they freaking push it right back up. Boom. Yeah, Benjamin. So they bounce it off the 50. But Benjamin, what I mean is if you look at the 5 minute, look how it flushed the 38.2 but closed above the 23.6, right? Or sorry, closed above the 38.2. That's the big takeaway on this Fibonacci that I'm teaching you guys. All right. Now I want to stay in my equity on Amazon as long as this Nasdaq continues to push up, guys. Long as it continues to push up here. And matter of fact, the closer we get to the backside of the red box, um, really because there's not confluent right now with the ES supply zone and the Nasdaq red zone, my overall thought process, and again, this price trumps my thought process, but if the ES is gearing towards hitting my 47.53 level, then I would be looking at confluence with the Nasdaq and the ES for prices that then pull in. Okay. But again, price trumps that. That is just my overall thought process at the moment. Okay. Does everybody understand what I just said? Anybody not understand what I'm saying? And let's get back over here to IWM. So let's go through this. One of our awesome members over here, Chris, he's talking about IWM, and I 100% agree with his comment. You know, he's at this if this, then that, basically. But my big thing is that again, people, what I'm noticing across the board, especially a lot of mentors, they're not teaching people how to trade when the market is going down. It's like you only have this one option, whether you sit on your hands or you buy puts, but you can also identify demand zones. All right. So if you're in puts, you want to understand where the demand zone is. Does everybody understand that? So what I'm saying is you buy puts to target demand zones. Demand is where your institutions are going to show up and start to buy. Okay. So when we're looking at the chart itself on IWM, I'm going to start with a weekly chart right now. Now I have trendy edges, which identify the playing fields of demand, okay, and or supply. And you guys can see here in the room, we have an inside and down formation. This is your supply zone, if you will. And you can see that we have trendy indicators right inside of there. Now, again, old fashioned way, I'm going to teach you how to find supply and demand. Okay. That's the easy part. But once you get into a groove of wanting to trade very quickly, and or you don't have time to look at charts all day long, your indicators are already identifying this stuff. Okay. So again, the color codes of the indicators tell you how long to take the trade. And in this case, Chris, when I look at this trade, okay, where are we coming into? We're coming into the mid edge. Okay. So we're going to take this weekly, we're going to break it down into a daily. And I want to look down and to the left. And as you can see here on IWM, this is your imbalance in the market, guys. So I'm going to put a little zone around this thing. Okay. So all I'm doing is taking this structure right here and we're going to make it like this. Okay, and instead of being a D for a T, what I do with this line right here is that I come up a little bit above the structure, and then this line down here, I'm gonna go a little below the structure. So this is my zone, and this is where, for me, Chris, if this cannot hold, this is where I'd like to buy IWM. 188 by 183. So Chris, I'm kind of curious if you kind of have that same little level down there, man. And that's a beautiful imbalance, by the way. So that's what we're looking for is imbalances, demand structure, just like this. So if we fill in the gap, it looks like this. This is a lot of imbalance. The idea is that orders went off, they weren't filled completely. So when we trap retail traders, that's you and I, trap them at the top, then we drop price and then we come back to where we know prices are a bargain. So this would be the clearance rack right here. Okay. So again, that's what I'm looking at. You know, Amazon is just moving so slow. I'm going to take the dollar. Okay. I'm going to take the dollar on Amazon, about a dollar. Not, well, actually, not even that. Only 60 cents there. So slow. So now I want to be looking at options here in a few. I'm going to wait though, probably until about the European close to kind of see where we fall. Now I want to bring you over to the main screen while our future blueprints are working out here to the upside. And I'm going to continue moving these Fibonacci's. Can everybody see my futures charts pretty well? Is there anything you guys need me to do? I know there's a lot of lines on the chart right now, but I really need to sink home how important this damn 23 and 38.2 are. Okay. All right, cool. I hope you're getting it. You had one easy process this morning. Don't think, go long above the PMZ, and now you're getting paid. That's what it's all about. Telling you guys, put the thinking caps down, right? Everybody wants to be a scientist. Like I've already done the work for you. All you got to do is execute and understand your allocation. All right, looking there. Boom. Sorry guys, just kind of going through my positions, seeing how we're doing. Snow's looking amazing. It's up $6. All right. Now let's get to um, let's get over here. And like I said, once we get we could stall here at the H2 on ES futures instead of getting to my red target. I've seen that every once in a while, so we'll see. Nasdaq did not give any craps about the H2 up here. They blew right through it. So, anyways, that's the close, Edward. See right underneath it, Edward, it says sell equity. So, oh, I see what you mean. It doesn't say close, which is kind of frustrating, but it is to sell it. So I'm out. Yep. All right, now let's get into some watches really quick. Bitcoin, up 1,000 points. That's kind of where we were. It's pretty sideways from the open. Not a whole lot to do. AMD was also on your watch list, guys. So hopefully you took a look over there at my watches. That was a good trade as well. Coin down a little bit. Could be an opportunity to go long. CRW. We'll look at coin here in a second. Google's up. I'm in Google equity. Microsoft is up. I'm in Microsoft. And moving on down here, I'll tell you what, one thing that I really took away from last year is like instead of trying to trade like all sorts of different names, I mean, I'm still going to do that if I get the setup, but my main focus, I just want to focus on the stocks that are I hate to say this, but like the popular ones, because the big beta names that are actually moving, it's just a waste of time sometimes to like do this whole thing where you're like, oh man, my system is saying like I should look at this little guy. He looks like something that could blossom into something, right? He's always been a bad kid, but I think he'll get better. It's just a waste of time. I'd rather go to a high beta name that can move and I want to make my money quick. That's why I always tell people like, you go trade a stock that's under $10 and you wait for a month for it to move a dollar. Like, come over here and let me show you how to make a dollar in NVIDIA in a matter of seconds, right? Like why put so much emphasis on such a small company that really at the end of the day it feels a lot like penny stock trading. We're all here just to, unless you're an investor, which I'm not here. I'm not a financial advisor. I'm not recommending investing to anybody. What I'm trying to do is just teach you how to trade from a perspective of weekly, monthly, quarterly, that kind of thing, intraday as well. So, all right, here we go. We hit the target up here towards the target, anyways. This was also on CRWD. So, if you guys are watching and looking at the trade setups, um, we push out of the PMZ. I just want to give examples really quick, if you don't mind. So just give me a second, and then I'll come to anyone that may have a question. So in this particular case, what I did was I presented crowd to the crowd, right? And what you do is you apply my methodology to the trade. So there's a reason why I found the trade, right? And the reason why I find it is because there was a setup here, okay? And it's the same setup over and over and over. So we as traders feel confident, right? I'm your mentor. I'm showing you something that I teach you. And then what you do is you come over here and you go, okay, I'm looking at the PMZ this morning, and my PMZ, okay, on this crowd, and guys, I'm going to point it out to you, is 79 cents. We're going to go ahead because it's crowd, and we are going to round that up to $1. Okay. And if any of you have questions, please bring them up. I'm trying to monitor 3 different rooms right now. So YouTube, options, and the trendy room. So right here, okay. Yeah, Trader IQ, just go long. Yeah. I mean, the risk is so small today. So right here on the crowd strike, your risk is $1. Now, the reason why I round these up is because if you've been in the market for quite some time, you start to, realize you're like, well, 80 cents is kind of tight on the name crowd. And so we're just going to round that up to $1. All right. Now, the idea, if you go back to what I was telling you that Mel and I do, is that we are not stopping out on $1. Okay. So the difference between these two lines right now is 80 cents. So all I'm doing is adding 20 cents to this, okay? So for example, if we go here at 34, it would be, down here somewhere, all right? So we put our stop, in this case, underneath the trendy edge, and as soon as it breaks, we're going long. So again, risk to reward, $1, and we have pushed on entry 252 into 255. Okay. Again, I'm not one of those traders who is going to go back and say, this is what we should have did. I'm forward looking a lot like the market. So this is the same process over and over and over. Okay. Execute on the long. How do we stay in this trade, everybody? On crowd, how do you stay in this trade? If you want to do this from an intraday perspective, how do you stay in this trade? What are we going to use? What are the 2 things we're going to use to stay in this trade on crowd? Add into just these 2 things that are going to help you stay in a trade. Okay. Watch this. So on a 5 minute, I want to give you guys some perspective. If you got long at 252 and 20 cents, okay, and you're trading at 256, you are up $4. Okay. You're up $4 right now using this strategy. Okay. Now I want to show you this. If I use the cloud and said, hey, if it closes under this, I would lose my profits. So what we do is we gauge them, right? We go, okay, John, I get what you're saying, but I'm up, $4 now. And if I get stopped out, then I lose my money. Okay. So what do you do in that case? Can anybody tell me? Does anybody know that's listening? What can you do to reduce that risk, but still use the same indicator? And by the way, guys, notice how we held the 38.2 and we're still pushing up here. We just flushed or breached the H2. Things are looking awesome. We're headed to the red box here on the ES future so far. The NASDAQ, who gives a shit? We don't need to go short. There's no signals. There's no nothing. Let's let it play out. It's getting close. I'm feeling it. It feels a little extended, but let price be the one. All right. All right. So somebody said scale out 100%. You could scale out, but check this out. What we do is we reduce the time frame. Okay. Let's go to time frame. I'm going to come down here. I'm going to change it to a 3 minute. I'm going to take the 5 days off and do 1 day. And the reason why I'm doing 1 day is because there's too much data in 5 days when you go to smaller candles. So let's go 3 minute and let's do 1 day. This is going to help you guys out. I'm actually super excited about this. You'd be surprised how many people don't have this strategy to help them stay in a trade. And you could use, a roll in ATR or something like that, but and if it's confluent with the fibs, that's great. All right. So what just happened when I put this on a 3-minute, guys. The cloud came up, right? The cloud came up. Now watch this. I'm gonna go to a 2-minute. And yes, when we're in profits of $4+ on the day, who cares if you're looking at a 2-minute? I remember it used to be like a shame, right? Anybody see the meme where the woman's like walking down the thing and they're like, shame, shame, shame. It's like, I felt like that. If you're looking at anything less than like a 10-minute chart, it was like embarrassing back in the day. But now it's like a way of life. So the 2-minute, what's happening is every time that we reduce the time frame, our EMAs are getting closer to price. Therefore, our risk is tightening. Okay. So in this case, we bring this into a smaller time frame until you find your risk tolerance. Okay. Now that's from a cloud perspective. So as you could see, if we got in at the PMZ high and we're up about $4.50, $5 or whatever, now we can say, all right, well, if it closes under the 9 EMA here, I'm getting out of my trade. Have rules in place. Okay. Guys, we just hit the target to the ES red box, and notice the little theory that I had earlier of using the the blueprints is that we would hit both at the same time. So ES futures hit this, and now the NASDAQ is pulling back. So now we have symmetry, if you will. Okay. Everybody understand? Everybody seeing how that works? So the way that I look at this is NASDAQ is a leader. So NASDAQ is pushing price. It's looking great to the upside, but the ES was lagging far as like just looking at charts. Okay. The ES was lagging. I waited for the ES to come into the supply zone. And now, since both of my main watches are hitting their levels, they are now pulling back. All right, and we continue to use our Fibonacci's because these are really important. If anybody is having FOMO today and they're thinking like, okay, well, I didn't take a trade, it's sad, right? Because we've coached all the way through this thing. All right, you get to watch it. And then now we look for a place where buyers might step in. So my overall thought process here is that price is going to pull back at around 38.2 to 61.8. Be patient, and let's see if buyers will show up here. Now, it doesn't have to. We still apply the same rules. So see what I just did there? I start telling myself, I give myself a theory, if you will, and then we start to basically block the brain from working. Like that's how I look at it. Because now what I do is I put in my head that price is going to come back to 38.2 by 618, whereas price is king, right? So we do this to ourselves a lot. We really do. All right. And what it does is it puts a mental block on everything. Um, because now I'm like, I don't know if I want to get long, right? You guys see what I just did to myself there? Now I'm okay with that. We're in profits this morning. Things are looking great. And matter of fact, it's one of those days where everything's working out to the upside. You might as well start trimming, pulling those stops up, taking some profits, and just kind of relax and educate through this. Okay. So next target here on CRWD is going to be 257.99. Um, Anybody have anything that they would like to look at? I'll go ahead and bring that on now to see if you guys would like to see any other charts that you might be interested in. Let's go up here into, yep, Bitcoin pulling back a little bit. Apple up, oh yeah. So our Apple position, so sorry. My Apple position is up 51%. So we sold puts on, we sold puts on Friday. Let's go ahead and buy those back for 50%. And there we go. Man, I almost forgot about that. How many of you guys sold how many of you guys sold puts on Friday with me on Apple. That was a solid trade, wasn't it? And awesome. Good job, guys. Now, if you want to continue holding it, you're more than welcome to. That's totally up to you. I'm not your financial advisor, but I went ahead and closed there. Let's go over to wait, somebody just asked me MSTR and then oil futures. Let's see, move stop, move stop. Okay, you guys are just answering me. Sorry about that. Let's look at MSTR. And yeah, look, we just made new highs. See, no turn signals yet. No turn signals. So conservative approach is really working out here instead of being aggressive and trying to short. I know a couple people, Melissa, who are probably trying to short that entire rally. How about you guys? Oh man, our Google's even positive. What is going on here? Well, the Google that we added on Friday. So I'm going to close the ads that I put on. You know what? I'm not closing anything. I'm going to let it hold. There we go. Amazon is at the next target. Good place to trim. Good job, Mel. Sorry, I got to send a text to my daughter. She started back to school today. They're on break. All right, CrowdStrike hitting, baby. Up $9 this morning. Jeez, let's go. And okay, cool. Sorry, guys, just gotta check a couple positions here. And okay, good deal. All right, let's get this master in here. MSTR. Is that what you said? Oops, GMSTR. Give me 1 second here. Down $33. So the first thing that I want to do anytime I see something that's down, I want to go to a high time frame. We want to know if it's coming into demand. So MSTR for me, it's into a trending edge here, but the pullback itself from 725 into 600, that's a good $125. You guys can see that it's coming into a level of support. There's a demand zone in here for sure. And so this is where I would have a strategy to scale in. That demand zone actually is right here. And you can see the trendy edge is already there. So, yeah, I mean, I would approach it just like these red and green boxes. So this is your green box, if you will, on MSTR. Conservative approach, you wait for a trendy turn signal, trade it on the day. From an aggressive approach, you just start accumulating in here and your stop is placed underneath this box here. Okay, so a close underneath 569, I would be out of the trade. And then I would be looking to buy at 528 by 485. Okay. Nice. Good job, Arizona. Good job for you. What were you trading there, Bob? Oh, I see what happened here. Sorry, guys. So in the options room, I was like, why is nobody talking? And then I realized, hustle bustle, Trinity. How's the easiest way to find the PMZ and TOS? Um, yeah, it's a premium tool. Cody Ashmore, will you be on the mic today? Let's look at coin. So, I mean, MSTR, look, it's already bouncing here. It's just a little demand zone. Let's go to coin because I'm definitely interested in coin, especially because it pulled back. Bitcoin's up about 815 points right now. Hopefully, you guys saw my 2024 projection for Bitcoin. It's out on X. And don't forget to follow me out there, guys. There's a lot of content that I push out every single day. Um, a lot, like a lot of content. So I have 600 videos on my YouTube. You can learn a lot of stuff there as well. But as far as coin is concerned, it came down into my support. This is the same chart that I gave you guys last week. So you could have just bought the support this morning for a couple bucks to the upside, two or three to be exact. Um, you know, this is like a if this, then that type of scenario. You could try the bounce here. This is the trendy edge, by the way. So if I take this off, you guys can see that's the trendy edge. So the way that we teach this, the yellow, that's like a 1 to 5 day trade to the upside. So when it comes down 1 to 5 days, down here, you're looking at anywhere from like 1 to 4 weeks. And down here, the blue edges, 6 months. Okay. So that's what we're looking at there. But the if this then that, the best way to do it, this would be like, let's have fun today and make some money. But far as like a swing position, I'm going to have to see that the market can push over this level here. So a scale in. So again, this could be scale in and then add with size once we get above here. And what happens if you're wrong and we close up underneath here, your scale in position's smaller, so you're not taking that big hit. Yeah. So on coin, if you have the edges, you buy here, right? And your stop is a close underneath that level, which is, give me 1 second, 147 and a half. Okay. NVIDIA, actually, I thought I put this in the options room for you guys. You guys got to look at my notes, okay? So I'm giving you plays there. Gave you a play there last week. We should be hitting target now on NVIDIA. And there it is. We blew right through it. Would have been nice if we came down here, but this is telling you something right here, folks. You know what I mean? This is a classic breakout when the whole market was starting to get bearish and stuff like that. You might want to rethink your indicators if your indicators are telling you to go short last week. Just kind of, you might want to start looking at what is going on. I'm seeing a lot of people posting things like, I promise you, if you just take this thing to a whiteboard and if you go back and study, watch some of my videos that I did where I show you how to do supply and demand from the inception of the market. This is something that's been around for eternity, meaning supply and demand, and this is how the market trades. If if you just apply this one simple rule, the same rule that I showed you this morning, if you can find a trend, and what I mean by finding a trend, let's say that the market does this, and then it breaks down, and then it goes sideways for a while, and then it goes back up, okay, like this, and then does this. This is what the market just did. And almost every, yeah, like I can't even make this up. The world's coming to an end. Market's never going back up again. Everybody's getting a sell signal. If you just apply this one rule, find your trends. I want to show you what I mean by that. This is an uptrend. This is a downtrend. This is a sideways trend. We do not count this. This is an uptrend. This is the market that we just encountered. You're going to apply your Fibonacci's and anchor them, and you would have seen that the market itself last week came into a 23.6 or something like that. I have it in all the notes. And so this was a buying opportunity. And we're coming into earnings season. Now, this is still a relief bounce. Can anybody tell you the major number that I gave you on the ES futures this morning? Anybody know? What was that major number I gave you for a relief bounce on the ES futures? Can anybody tell me? 47.50. Okay. 47.50. That was your level. Price pushed up, 47.54, currently at 47.50. This is 38.2% of last week's drawdown. It is a relief bounce until proven otherwise. What we want to see today, it doesn't have to be today. What I want to see this week is whether or not we can close over 50 or 80, one of those two. I really don't care. But one of those two I'd really like to see for the bull market to continue. If we can't close over that, I believe that banks, right? Banks will be a good reason why we could pull back into those lower imbalances that I'm showing you. So I believe these bounces are an opportunity if you came into this year and you were spooked, or if you're in profits, okay, from today, from last week, right? Go ahead and start bringing those stops up. All right. And let's reset because banks are going to do something. For the person that asked for NOW, this was a really straightforward trade for us as well. What we'd be looking for on the move up. All right. Nice rally. Okay. Pulls back into a trendy edge. It rounds out. Once we go bid above here, you're looking for the long. Now, again, looking for an entry. How do you do that today? Boom. PMZ. Your PMZ, your risk today was $1. You like the trade, you go long. This is a trendy edge. This is your target. You guys can see there, your entries are coming in at 682 and you're trading at 695. Okay. I can't make this stuff up. It's a really straightforward process. I do need to make sure that I put a disclaimer out there. The PMZ is an intraday strategy tool that we came up with almost 8 years ago, I think. All right. So it's nothing new. Thousands of people are using this. It's been around for that long. All right. And it works really, really well. But again, there are going to be times that you get stopped out. The beautiful thing about the PMZ is that you're getting stopped out for something that you understand already. And if you don't understand, from an option standpoint, you take the delta. Let's say that we have a 50 delta for today on NOW. You load your options, you're ready to trade, and all you say to yourself is if price goes over the PMZ and it stays above the cloud, I want to get long the 50 delta. I don't know what the 50 delta costs. Let's just say that it costs 10 bucks. I need you to understand that your risk is not $10 unless you go to bed with it. If you go to bed with the $10, you could wake up and tomorrow it'd be worth $1. This strategy is for my intraday traders who are willing to risk the dollar, okay? But also give it the flexibility of the time frame. So I understand that things can change because if the stop happens $3 down, well, guess what? You lost more than $1. Okay. But the strategy works so well, it wins more than it loses. And we have a really good example of that, Melissa. Melissa is our example. She is by far the most disciplined PMZ trader that I've ever met. Okay. That's why she's here. And she has last year, Melissa, and I don't know if you can hear me. She may or may not be around the mic, but I want to say for the entire year, her win rate was somewhere between 77 and 81%, Melissa. You'd have to correct me if you can hear me. It's really impressive. 78%, folks. I don't know many people that can trade at a 78% win rate. And when I say volume is a big deal, Melissa's not taking one trade a week. Okay. We're in and out of trades. We're traders. So we're taking a lot more than a couple trades a week, if you will. Okay. So very, very impressive. Hats off to you, Melissa. And if anybody didn't know here, Melissa is now full time here at Simpler. So congratulations to Melissa. If you guys didn't hear me say that on Friday, I am very, very blessed. We are blessed to have her here, showing you how to trade the trendy methodology as well. So going back though, guys, when I say and I talk about the PMZ, it is an intraday strategy until proven otherwise. Okay. What I mean by that is trade it. If you make 100%, keep some. Keep it as a swing trade. All right. The next thing, I am by far, and this is where people might get confused. PMZs are fun, whatever, but I am by far a supply and demand trader. The PMZ has nothing to do with supply and demand. Absolutely nothing. The only thing that it has to do with it is that you understand your targets. For example, in OW, an entry is off the PMZ. This right here is called a weekly edge. It identifies weekly supply. This is called a monthly mid. It identifies monthly supply. We have what's called two stacks, meaning two supply zones right here. So you know that when you take this trade this morning, that your ultimate target would be right here. Therefore, somebody can say, hey, I'm risking $1 and um, my target is from 682 to 696. So guys, $1 for 14, I would have to say the risk to reward on this trade is absolutely amazing. For the person that's wondering, hey, can I trade this thing? Is it too late? It's up $17. This is what I would tell you. The ES and the NASDAQ futures are starting to pull back a little bit. The ES futures hit my red target. Okay. So this is the time for me in the market. This morning, I go ahead and raise my stops if I'm willing to get out today because I understand that things can change now. ES hits the supply, it starts to pull back. That means my positions are going to pull back if I am net long. Okay. So would you be surprised if NOW pulls back right now? Hell no. Right? So opportunity does exist. What I would be looking for is that these edges here are your resistance, okay, for right now. So what I would say to you, if you're interested in NOW, is first, you got to, when you at least when you speak to me and ask me about things, I really ask that you tell me what is your expectation to be in this trade. And this is where we all kind of like, to me, kind of lose sight of trading. Like, see this when I come over here, guys, and I go to my watch list, and let me make sure that I'm right on the live screen here as well in the Trinity trading room. Give me 1 second, guys. Yep, on the right ones. Okay, cool. All right, so all I have to do is double click on the edges. And from this perspective, everyone, I'm going to freeze my screen. This is for all you traders in mind of how you like to trade. This is identifying playing fields of supply and demand. This is for my day traders. This is for my weekly traders, meaning like 1 to 5 days. This is for traders 1 to 4 weeks. This is for traders 6 months to a year. So I've already identified the zones in advance. You don't have to do any updates. Everything's right here for you. All you have to do is click on those. Okay. So when you ask a question of, hey, what about this name? My question to you is, how long do you want to be in the trade? For example, if you want to be in this trade on an OW for this week, so anywhere from 1 to 4 days, I would tell you price has to get over 700, okay, for me to feel better, and my target right here is 714. If we get a pullback tomorrow into 685, it's a buy for me with a close under 678 as your stop. And it really is this quick. Once you have the levels and the understanding, you can come in here, look at the levels, understand where they're coming from, and you can put together your own play. Now, it doesn't have to be about calls. If you want to get short, same thing. My stop would be over 697, a close over 697. My target would be a pullback into at around 689 by 685. Okay. So again, all you're doing is shorting supply and then you're looking for a pullback. Now you can use that same technique that I actually taught you this morning on 23, 38%. Let's go ahead from here to here. And if you went short at the trendy edge, you would identify the 23 and the 38. See what I mean? So everything I taught you this morning can be used as a short side and or a long side. If you want to be good at shorting, you got to understand where to go long. If you want to be good at going long, you need to understand where supply is and where you'd go short. Those two things are very important to each other. A lot of traders can tell you where to get long, but they don't know how to give you targets. Okay. So this is how we identify those. All right. So again, that is my analysis, but again, it's totally different. This is why we use this type of chart. Uh, I use this right here so that I could show you the big time frame, and we can give you that top-down approach. Big time frame for NOW. If for some reason we start to close underneath this upper trendy edge of 677, I think it's a short, and I think later on in the year you could see 615 by 560. Okay, that's from a quarterly perspective. And notice how the trendy edge works really well here. See, this is so targets are so important to us in the trendy room. Um, targets not based off of how can I put this? Targets that are based off supply and demand, not targets based off of rolling averages and things like that. Supply, supply and demand does not move. It is concrete. It sticks in the market. We wait for price to get there, and then we execute off of it. Okay. Yeah, that's right. So no mo FOMO is talking about win rate versus like a your win rate does not mean you'll be profitable. And for new traders out there, what we mean by that, you can have an 80% win rate. This is and I'll tell you, this is why I don't get excited about people showing me how much money they made because you can make $200,000 yesterday and lose 300,000 today. You can make $2,000 yesterday and lose 5,000 today. All right. You can have a win rate of 80% and the anything can happen to you in your life, right? We're all human. Like we could do something absolutely silly. Like I've done really silly things where I accidentally execute a put rather than a call. I've not looked at the order, right, and accidentally bought too many contracts before and put myself into a frizzy. You know, I'm like, oh my god, what did I just do? Right? There's a lot of weird things you can do, but also you can get too confident, right, and then put all your money, more money than what you're used to trading based off of a percentage, and then you could take away all the gains for the entire year. Now, I will tell you, um, you're not going to see that with Melissa for sure. And here's the thing, though, right? Being fully transparent with you guys, I say this a lot. I said it in the webinar. Uh, Melissa is not normal, you know, and I say that in a very good way. Most people, they fluctuate, they have a hard time, their emotions get in the way. She is by far very, very disciplined. And she will tell you, so she trades $750 every time she takes a trade. And it took me a year to convince her to go from 500 to 750, but that was awesome. She had to see her overall discipline play out, the strategy. She traded it over and over and over. And then when she was ready to size up, she went to 750 bucks. So one thing that you can expect from Melissa is that every time she trades, she's trying to get close to 750. And what's really neat, because we have the API alerts, right, is they're coming straight from our accounts. So we don't type any of this stuff in. So what I mean is if you come over here and you look at these alerts right here, I'm not typing these out. They just boom, as soon as I execute, they're being sent here. Okay. Now, what's neat about Melissa's alerts, and I need to say this real quick, our alerts are for proof of concept. I don't advocate that traders, because this is how I started, just trying to follow alerts and try to make money, I think is just it's not the greatest. All right. What I'm trying to say is I'm going to teach you. I talk a lot. Melissa teaches amazingly. These are proof of concept. This is to say we do what we teach, right? We do what we teach. All right. We walk the walk, guys. And so when you look at this though, and you see Melissa's trades, they do have quantities on them, right? So let's say that Melissa gets in, let's see, any of these entries. I may not see them right away. Let's just say that, you know, like this one, okay? Let's say this is a $500 trade and say my allocation is 500 every single time. What's really neat is when these come across, you can look at them and go, okay, well, he only took one or she only took one. You must be expecting ads to come in, all right? Especially when you're watching Melissa because she's very, very disciplined on her overall amount allocation that she's spending. Anyways, guys, it's been an absolute pleasure. You guys have Sam up next. I really appreciate you, and I hope you had fun trading today. Most of it was just management and coaching you through this beautiful move in the ES and the Nasdaq futures. And of course, we've been trimming here, and we'll continue to do that. We'll see you over in the Tr3ndy room. Everybody, have an amazing day.